Okay, back again with real money trades for my masterclass over at simpleswitch.teachable.com. If you go over there and take my masterclass, it will get you up to speed on what I'm doing with this real money trading series, growing a small account in the futures market and with swing trading. And I chose the futures market to go with this because I don't have to worry about the PDT rule and I can day trade. In my masterclass, I take you from day one to I want to be a trader, then selecting a broker, opening an account, then teaching you how I build winning strategies that fits you. So I call it the PLG, personality, lifestyle, and goals. But not just that, strategies that have a proven statistical probability of success. Once we build our strategies, then we build a trade plan to go with those strategies. Two completely different things, traders. You need a good strategy and a good trade plan to be successful. Then I sim trade those strategies, and now we're into the real money trading portion of building a winning strategy. That is what this series is about. I plan on trading these accounts until the end of 2023, and we'll see how far we can grow them in 1 year's time. Now, I don't know if these strategies are going to be successful. We're going to find this out together, and if they're not, hopefully I can tweak them along the way to make them successful. I started my futures account with $1,700 because that was the bare minimum I felt like I could start with. And then I started my swing trading account with $2,000. Again, I felt that was the bare minimum I can start with. In my masterclass, I explain all these details and why I make the decisions, what you're seeing on the screens, the charts that you're seeing, all the tools, all that stuff. This class can benefit beginner traders and pro traders alike. I do trade with my algorithm, but you don't need that in order to benefit from my masterclass. You can trade with whatever tool it is for you. If you're thinking about taking somebody else's class, my masterclass can help you choose what other strategy might be right for you. This way, if you're going to spend a lot of money to buy somebody else's strategy, it would really be good if that strategy would fit you. And I teach you all about that in my masterclass, so go check it out. But for now, let's get into today's video. Okay, so check. Oh yeah, there we go. All right, so we got the MGC setting up right now, right here in the futures market with the red light, green light strategy on the 15-minute candle. We got about 30 seconds left. Right now we can see the trade setting up. So right there, as soon as the candle closes, I'll jump into the short side and then hopefully make some money. And I can set this up ahead of time. It doesn't matter where this moves. This spreads will always stay the same. And then I can put that into my strategy manager and then see what my risk is and then decide whether or not I want to take the trade and how many contracts I'm going to take the trade with, which is going to be 2 contracts in about 10 seconds. And then we're going to put the OCO order in and the speed bump, so we can speed bump it if we need to speed bump it. All right, we got 4 seconds. Looks like it's going to confirm. 3, 2, 1, boom. Okay, trade is in. So now we got the markup. I'm going to adjust it so that it's correct. I just do it that way. All right, let me take these off so I can see my chart. Okay, so my markup is correct now. So I'm going to put the OCO order in, and then I'll go over to the My Strategy Manager and put it in the trade log or the journal. Okay, I'm going to make a new high before I get out here. So that's why I move my stop up there. Make it break structure. Yeah, I'm risking a little more than I'm making, but as you saw in another video, we could squeeze more out as well. So, but the base setup for the trade does have me risking a little more than I'm making, but that's how it works out better in with MGC with the 15-minute candle on red light, green light. I'm more profitable doing it this way. So now I'm going to go ahead and change this to 4. Right click, cancel, replace. Okay, so now that says 4, so that'll speed bump automatically now. So if it goes against me, I'll buy 2 to get out of the trade, then I'll buy 2 more to get in the trade immediately going the upward direction. So we'll see how this goes. And actually, since I'm going to be around the computer, I'm going to go ahead and pull this down here. And then I'm going to go ahead and put my alert in, create an alert, single, at or below, create. So now it's going to go ahead and text me, and also my computer will make a noise as well when the candle hits this level. And then I can go ahead and start trailing my stop as you see me do on other videos. So right here on the chart, you see another trade for MGC that happened in the morning. Unfortunately, when did it happen? 9:30. I should have been here, but I wasn't. I was taking a little one to school, and then I went on shopping. So I missed this opportunity. This would have been an awesome trade, huh? Actually, I would have got out right on this candle right here. It would have been fast. Boom. But it's what it is, and this is the other trade that we took the other day. And then, yeah, so that's basically you're up to speed on the chart. At the end of the month, I'm going to go back through, at the end of January, this entire chart. So you can see all the markups and trades. And if you've been following me a while, you know what my algo looks like. And then you can decide for yourself whether or not my algo was successful with MGC for the month or not. So, all right, everybody, we'll bring the conclusion to you. All right, so here we are with MGC, waking up to money in the morning. So one thing is, I love having a strategy where I don't have to sit here and watch my candles. You sit there all day watching and waiting for an opportunity to get in. And then you sit there watching and waiting to know when to get out. And next thing you know, you spent 4 to 6 hours trading to make a little bit of money. Or if you're not going to be at your computer, you can't be in the trade because you're not going to be there to see it to get out. I don't like trading like that. That's why my strategy lets me set it and forget it. I literally can spend just a few seconds every 30 minutes, every 4 hours, every 15 minutes now with MGC, and see if a trade is set up, and then carry on my business. MGC, I don't, this is my bonus money ticker, MES, with the 30-minute and the 4 hours, the main. So with that, I really only need to come to the computer every 30 minutes and every 4 hours during my trading window to see if there's a trade, and I can spend the rest of my time doing other things. And then once there is a trade, I can get in that trade. It takes me a couple minutes, get in the trade, walk away, and then I'm done for the day. That's it. So for the rest of the day, I don't have to worry about it. Usually I take one trade a day, 1 to 2 trades a day. So once the trade sets up in my time zone, then I know I'm pretty much not going to have another trade that day. So I can walk away and be done for the day, make my money, and do other things without being captive. Because if I'm captive all day, then trading becomes a full-time job. And I don't want a full-time job. I want my money to work for me so that I can just go and play. Full-time job is definitely not what I want in trading. But some traders have turned trading into a full-time job. That's one thing to think about when you're thinking about what strategy you're going to build or what strategy you want to buy. If it's a strategy on a 2-minute candle or a 1-minute candle, it doesn't mean setups are happening every minute or two. It could take hours for that setup to happen, and you have to sit there literally watching your screen every minute so that you can see when that setup's taking place. But if it's a 30-minute or 4-hour strategy, then you just have to check your screen every 30 minutes to 4 hours, right? So all of a sudden now you're not captive at your computer so much. Even a 5-minute strategy is a little bit, more spread out, where you can look away, go get a drink or whatever without missing an opportunity. But still, you're going to be captive there for quite a while with those strategies. So something to think about when you're looking at what strategy you want to do or what you are doing. Do you want to be captive? Do you want trading to be a full-time job? Or do you just want this to be like your ATM that you go to whenever you want money? What is it you're looking for? So with that said, money, money, money. And then let's move on to the next piece of this trade. I had my stop above the high of the day, or the high of this period, this little area right here, right? Zoom out just a little bit. So I put my stop above my high. And the reason why I did that was because my algo had my stop just below that high. But I know that with my algo, when it intersects with a high or a low, those highs and lows will most likely be resistance or support. And I didn't want to get stopped out right before resistance. And then, I'll get stopped out here and then the trade does that. I could have had a winner. Or I speed bump it and then it goes the other direction and then I have like 2 losing trades. So, and that typically is what happens when the algo coincides with that high and that low. So both those things together. Like right here, this was a high. Came down a little bit. A lot of resistance here. And then it broke out to the upside, right? So sometimes these highs will provide some resistance, but sometimes they don't. Sometimes they just break out. So with that said, this right here was a high, right? Because it was above here, closed, even right here, it closed as a high. There was no resistance. It just kept going higher. So, and a lot of times it'll go higher. But when it coincides with my algo, I know what to expect because there is quantifiable data that I can then have a proven statistical probability of success based on that data. This quantifiable data, this statistical proven probability of success, is what has made me successful as a trader. I've been trading for 26 years. I have not been successful for those the entire 26 years. The first beginning of that was a disaster for me, like 10 years of disaster. So, and the biggest reason is because I was trading on technical analysis. And I think if you trade on technical analysis and that is the way you're planning to get into your trades, you're probably not going to be successful in the market. If you are a successful trader watching this on technical analysis, and I don't mean successful for like this month, I mean for years and years and years. Like I've had good years, technical analysis, and then blow up my account. So, and lose all my money and just not be successful anymore. And then all of a sudden I'm successful again for a while. I don't see how you could be long-term successful with technical analysis alone as your entry, because of the subjective viewpoints and the confirmation bias and all the emotional stuff that can go with it. You can try to see what you want to see with technical analysis. So I marked up a chart here. For example, and this is probably a bad example, but this is where we're at, so I'm just going to show it to you here. If we were to look at a trend line and I said, if this trend line breaks, I'm going to get in the trade short because it's going down, right? If that was my strategy based on technical analysis. And this is just a really like kind of a really super basic example. I know a lot more goes into it than this. But right here, we could see, we got these touches of the candle. So I drew this trend line and then it broke right here. So now I could say, oh, it's going down. And then it didn't. So then I'm like, okay, well then I move my trend line to here, right? Because that's the new low. And now it broke below and closed on this nice big red candle. It's going down. I can get in and short this. No, it didn't. It's going up still, right? So I would have lost my money twice now. Or if I just waited for a close below, I lost my money. But now it's still going up. I'm like, okay, well then I need to move my trend line here. And then when this one breaks, now it's going down. So, and yes, it did go sideways and down. But then, I would have taken 2 losers for this potential 1 winner, and it's going to happen several more times. A lot of times, though, with technical analysis, when people are teaching it to you or when you're watching it, you don't see all these little things. Like your brain chooses not to recognize all these like losers that were in there. You instantly go to this. And you're like, oh yeah, technical analysis is great. Look, I could have easily, once it broke this line, I could have shorted and I could have, right? After 2020 hindsight. That's why it's 2020 day trader. Hindsight is easy. But when you're in the middle of it and your emotions are going crazy and you're seeing all these things, what is your brain really seeing? It's really hard. And then even if this was your deal and you did get in here short, where is your target on the to profit and where is your stop? And how do you know what that is before you ever enter your trade, so that you know what your risk is before you even get into the trade? Because if you don't know what your risk is before you get in the trade, I don't know how you can possibly do proper risk management like that. How do you do that if you don't even know what your risk is getting in? And then is your exit for your target and for your stop a data-driven point? Is there a statistical proven probability that is where you should get out for profit or for loss? And can you get that with technical analysis? And before you get in the trade, can you know what your numbers are so that you know whether or not you want to even take that trade or how many shares you should buy with that trade? So there's a lot of different stuff that goes into trading in order to be successful. Risk management is the absolute number one most important thing. And I believe the risk management I teach over at simpleswitch.teachable.com is by far the best risk management I've ever seen anywhere. And the reason why I do it my way, which is different than I've ever seen, is because I don't think it works any other way. I've tried all these different ways and they didn't work. So the way I do my risk management is very successful for me. So that I firmly believe it's by far the best that's on the market. So if you're looking to learn trading, or you're just not that successful and you're looking for new ideas, go over to simpleswitch.teachable.com and check it out. Or even just go back through my YouTube videos. I talk a lot about risk management in a lot of my videos to give you some pointers and tips, and explore what I have to offer over there, because it might be a game changer for you. The market has to be a very personal thing. What works for one person might not work for another person. So you have to find that thing that works for you. All right, let's go look at the My Strategy Manager and see where we're at with this account. So MGC, 1943, we got in 1938. We were hoping to get out at 1938, but we got out 1938.1, so not as great as we would have liked it to be. But, we're talking about a couple dollars, not a big deal. So I put $92 in the account after commissions. Thinkorswim with futures cost me about $5 per round trip per contract. So yeah, it can get expensive if you buy a lot of contracts. And then scaling ladders. Let's see. Do we scale up? Nope. Almost. We have to be so close to scaling up. I think it's right there. So this scaling ladder, again, it does all the work for me based on my trade plan. It's looking at all the data, and then it's telling me where to be. So right now, all these green bars have been filling in. If you've been watching my videos, you've seen this growing. So once this bar fills in here, we can scale up to $200 range. And if I start taking losses, these bars will go away and it'll scale me back down. So when you're looking at your trade plan, you have to look at yes, you can say, when do I scale up? But also, when do you scale back down to protect your account? What does that look like? So definitely think about that, traders. Not just about scaling up, but scaling back down as well. So there we are with the scaling ladders. We're almost there, almost there. So let's go over to the dashboard. So January looking pretty good, 2,800 so far for January, 2,848, which is not the full amount that we made this month because we had that carryover from last year, $1,900. But we're almost $1,000 for the month, so that's pretty sweet. Maybe we'll hit that before this month ends. And then right now, combined accounts, we started with our futures and our swing trading. So our combined account total starting this was $3,700, and now we're at $6,548 after commission. So pretty fantastic. Futures, we started with $1,700. Now we're at $2,883. So hopefully we'll double that by the end of February, if not in the next couple of weeks. Swing trading, we started with $2,000, and we're at $3,665. And again, this might take a little longer, but hopefully we can double this by the end of February as well. And then we would have got our first doubling of our accounts. And then we'll be looking to double it again and again and again and again and just make a ton of money. At least that's the goal, that's the hope, that's the plan, that's the wish. All right, everybody. See you on the next video.